All right. Good morning, ladies and gentlemen. It's Wednesday again, and we are going to do our live swing trading show, and we're going to look at some interesting stats from the month of February, and we're going to look at some open trades and some closed trades and some pending trades, and let's get things started here. So, I have Jeffrey on the horn with me. Good morning, Jeffrey. How you doing today?
I'm doing great, Bill. Thanks.
Oh, cool, cool. Yep, weather's starting to get nice here. So, springtime is here. The time change is on us, and so everything's kind of everything's kind of shifting. The market's been really strong too. Hey, so check this out. Last weekend, I put together this little graph here of all of the closed trades from February. So basically, I just, and it's pretty easy to do. There's the CSV exports that we have on all the tables and everything. And so basically, I just exported the closed trades and created a little graph here. Now, I can't get the whole graph on the screen because there was quite a few trades, but this is kind of neat because it gives a really good sort of visual representation of how the picks did, how the trades did, right? So I'll scroll down to the bottom here a little bit so you can see the scale here. So basically, I mean, just by glancing at the graph here, you can see that the majority of the trades actually went on and did pretty well. I mean, they moved to the right, which is so this would be like the trigger price, right? And the dark green on here is like the max percent gain, like that's how far past the trigger it moved. And then the light green bars would be just the trailing stop. And so in theory what this is showing is the minimum percent gain based on following the trailing stop, and the min percent gain is the light green bars here. And so these over on the left here would be the ones that actually hit the stop that would have been below the trigger price.
Yeah, that's a fantastic chart. Um, yeah, that really shores up the main thing that we try to get across every time is that in any kind of trading, whether it's day trading, swing trading, position trading, investing, whatever, you got two goals. One is you want to have a higher ratio of winners, and you want your winners to always be much bigger than, your losers. Now, obviously, you could have one big loser at some point, but it's the average that you care about, right? So when you average all your winners out and you average all your losers out, you'll have an average win size and average loss size. You want that average win size to be bigger and the average loss size to be smaller. So if you meet those two criteria, more winners and losers, average win size bigger than average loss size, you're making money by default. And so that's what our system does for you by just following the automated system picks.
Well, it's interesting that you mentioned that because I also, when I was putting together that chart, I also put together exactly what you were just mentioning there, like a little pie chart of the winning trades versus losing trades. And of course, keep in mind when it says losing trades, these are ones that hit the trailing stop, or actually hit. I guess they would have hit the initial stop and or trailing stop below the trigger price, right? And so maybe a stock moved up and it could have gone up, fairly decently, but then it turned back around and hit that. But anyway, what you were saying here, if you look at this graph and these stats I put together, and this is from the beginning of January or February to the end of February. So there was a total of 51 trades that triggered, 39 winners, 12 losers, which comes to 76.24. And but this is the thing to key on. This is exactly what you were talking about here. Is the average percent gain was 10.6%, and that's using the minimum too. That's what I calculated this on. So this would just be using the trailing stop. But look at that. The average percent lost was only 2.5%.
There you go. Yeah. So we're meeting the criteria in spades of a robust, profitable mechanical swing trading system.
Yeah, what's cool about it is that the back end is programmed to do all the heavy lifting, right? It's not like we're picking these. So I'll tell you what was the most interesting thing about this. When I look at this pie chart, it looks like, 76-24. That's a pretty decent, percentage there. But when I actually go down to the chart here, I mean, I had to literally like count these twice because when I look at the actual graph, it doesn't really look like 24% of them got hit the stop in the negative, but they did. And so but you can see by the how big the bars are what the sort of what the end result was is that the stop outs were just very minimal, two and a
Yeah,
half percent.
and a real important thing to again to reiterate there with that pie chart is that it's not an either or, all or nothing. In other words, you didn't win you didn't win on the trades or hit the full stop. It's just it was some form of negative stop. So it could have been a teeny tiny percent as the stop starts to trail. Many of the, that would be an interesting graph too, to just show how many trades actually hit the full stop versus like other stops. But so a large portion of your stops that get hit won't even be the full stop. They'll be like tightened stops, right?
Yeah, absolutely, absolutely.
As the trailing stop kicks in and starts moving, if we have a good downdraft in the market and maybe you get taken out on a couple trades, it could be like minimal. There's a few in there that are like 1%, or I think there's even some that are a couple like a 0.5% stop outs,
Sure,
right?
sure. And yeah, there's a couple on here that actually had a little bit of movement past the barrier. And so my guess is, without actually analyzing each one individually, is that on, a good percentage of them, the stop actually kind of got trailed up a little bit, but it didn't have enough time to get trailed up, to either break even or past the barrier, but pretty close. So there was, quite honestly, there was one on here that was kind of significant, and of course that skewed the stats because the rest of them were pretty much insignificant. So anyway, I thought that was interesting. If you guys wanted to check this out, you go to the main website, InvestingSystems.com, and hit the blog, and that's where you will find this. So I can't really see that on the screen because I can't scroll up enough, but yeah, if you go to just the main website there. So
Yeah, so those are fantastic charts, and maybe we'll look towards coming out with a couple different ones. But back to looking at that chart and thinking about how you want to implement this system. We've talked about it many times, but if you're kind of new around the system here, the way you want to think about it is to not stress out about which one's better than the other, right? Keep in mind, every stock that makes it into the pending list has to meet a certain amount of criteria. In other words, there's a base filter that even allows them in there in the first place. Then they have to get set up with this really, really trick setup that we have, which is one of our best follow-through setups. Then there's the trigger mechanism. So see, before we even get basically a signal or an alert to take a trade, we're already meeting all this real stringent criteria, and it's all system picked. This is all mechanical, like Bill said. We don't pick these stocks. This thing just runs every day after market close and does all the magic on its own, basically. And so once you get a stock that triggers, you've already met like 3 layers of criteria. And then when we add on the sophistication of the trailing stops and the targets and whatnot, you can see how this system delivers big time. And so again, the way to implement this is not to go in big on any one trade, right? Because your dumb luck, maybe you pick the needle out of the haystack that turns around and hits the full stop, and if your position was too big, that could cause you, to get frustrated or whatnot. You want to start off with really small positions. Just take the trades. Don't worry too much about each individual symbol as far as like which one could be better. Now, again, like you can't take every trade that might come through and trigger, so you can look at the charts and you can say, yeah, I kind of like this one better than the other one, and or you could go by price range, right? We've had some, don't we have a pending in there that's like 400 bucks?
Yeah, yeah.
Yeah. Well, here's the thing. I mean, it it doesn't really matter because we're getting bad echo. All of a sudden we got bad echo. It doesn't really matter because when you adjust for position sizes, it's just you're just parking this about the same amount of money there anyways. So it doesn't matter if it's 400 bucks or it's 10 bucks. You see what I'm saying? However, some people might not want to trade a $400 stock, or they might not want to trade, $10 stocks. So if you have a price preference on your your stocks that you like, you can kind of use that as a filter. But your goal is to enter multiple positions per week. Try to pick off a few per week and just start parking money in the market, right? And then just let the mechanics work.
Yeah, actually, what's interesting about that is I went through these pending trades and I was looking at some charts, and there's a couple that stand out to me, right? So, oh, here's one right here. Lazy boy, right? Beautiful chart pattern. And so there's nothing wrong with actually going through the charts, looking at the different stocks that are either pending or the ones that trigger in that, and kind of when you're picking and choosing, like you say, you can kind of go with the price range, you can go with volatility. I like to go with the look of the chart, right? And so this one really kind of stood out at me. Old lazy boy there, right? It's got this really nice sort of flat top breakout pattern that occurred back here in January and February, right? Really nice breakout. This is probably an earnings move right here, if I had to guess, right? Because everybody was coming out with earnings in February. Then you had this real nice sort of orderly walk down pattern, a perfect pivot low, and lo and behold, and this is on the pending list, by the way. I noticed this a couple of days ago, and it looks like today, sort of as we speak here. This doesn't necessarily mean it's going to close over the trigger today, but so far so good. It's got a pretty good look to it, wouldn't you say?
Yeah, no, that's a nice smooth chart. And yeah, like if you like a certain chart over another, then trade that one. Again, you're going to be trading over the series, and you're going to be doing lots and lots of entries and lots of exits. And so just think of it as a long-term process, and you don't want to get married or hung up on any one particular symbol.
Yeah, sure. I got another couple other ones here I'll go through real quick. CVI. CVI is a pending trade. It's got sort of a similar pattern. We've had a little bit of a pullback towards the end of last week in the overall market, but you got the same sort of thing here. Nice uptrend, orderly pullback, uh, what we call like a confirmed pivot low, right? And so I haven't marked the entry on this. Well, let me just see here. I can pull this up and just have a look and see what the trigger is on this. It's 4020. All right, so I might as well mark this here. It's going to be right about there. So this one's pushing through. The other nice thing here is that even though we're looking at these right now, you don't necessarily need to jump right in this thing because, suppose like this afternoon the market reverses or some news hits and everything reverses. So what we're looking for here is a close over this trigger today, and then we'd be looking to enter this tomorrow. Do you want to talk for a second about, why you wouldn't want to just buy this, right here, right now, or whether you could, or whether you should go ahead and wait for the close over the entry or over the trigger?
Well, the reason that the close over the trigger is useful is because if you're a busy person and you're not watching the market, maybe you're going to get home from work tonight after the market closes, then that stock has triggered during the day, and you can go ahead and get it in order in for the next morning, right? As long as it is still trading above the trigger price. So that's one of the reasons for that. Um, if you wanted to, get an early entry, then yeah, you could take an entry the day that we start crossing. But again, keep in mind that A lot of some of these stocks can actually poke above the trigger and then come right back down intraday and then start another down leg, right? And that day that pokes above the trigger line but doesn't actually close can be like a little pivot high, and we start a whole new down move. So just keep that in mind. Again, though, over the series, the big series, things are going to average out, and you'll still have as many winners going up as. Yeah, because your other option is this. We do get some stocks that you get a close above the trigger line, right? Everything looks great, and then you wait till the next day, and there's a big gap up, gap and go. So the stock then opens up higher the next day and just starts running like mad, and you're nowhere near the trigger line anymore, and you gotta either chase that thing up there, or you gotta wait, or you pass on that one, right? So it's it's 6 to 1, half a dozen to the other. You're going to get those two different scenarios where you get in premature on a loser, or you miss a winner.
Sure,
That's
sure.
just the nature of the market.
Yeah, here's another one that's kind of shaping up a little bit. The trigger at 55.20. So it's actually kind of fun to go through. There's a lot of pending trades right now, and I think that that's sort of a function of the overall market because we have had this little bit of a pullback, right? We've had a lot of stocks that maybe they came out with earnings and had like a big sort of spike up. That kind of looks like this one too. And have gone into like little pullback patterns, and then of course the overall market took a little dip last week, actually, the whole week. So this MTCH has a pretty good look to it. And let's see, I drew a trend line on there. There we go. 55.20 is. And so this has still got a little ways to go here, but this is another one that I sort of think has a pretty good look. I'm going to go with, look at one more, and then we're going to talk about the CPA here. CPA's got a pretty good look, and this is another pending trade. Like I said, the trigger price on this is 85.20, so this one's got a little way to go, but it's along the same lines of what we've been looking at here. This is one of those stocks that tends to, have a big, nice sort of run up and then pull back, and then if this thing turns around and hits that trigger, you could have a pretty good look to it.
Yeah, that looks like it's definitely ready for some kind of a bounce anyway. And as we've mentioned in previous shows, you get a big macro pullback like this. You're looking for at least a 50% retrace, if not a three-quarter retrace back towards the highs. Once they start accumulating this sucker. Yeah, that is a good-looking one. And remember, keep in mind that the current posted trigger price is subject to change. In other words, that is very dynamic and adapts to the market conditions. So what did you say the trigger was on this one?
85.20. Yeah, and I was just going to mention that the trigger can shift, from day to day. So,
Right. So that doesn't mean that you have to buy it at that 85.20. It just means that you don't want to buy it below that price. And as the stock price itself, moves up and down and shifts around and maybe goes into a tighter range, you could see that trigger price even tighten down further, right? So um, just keep that in mind, that it's not about that's where you have to buy the stock. It's that you don't want to take action below those levels. That's a better way to think about it.
gotcha, gotcha. Yeah, I wanted to look at a couple. Wanted to look at a couple of open trades here. I'm going to pull up, let's see, Nugget, which is 3 times long the gold mining shares. And this is a pretty interesting one. Let's see, this triggered a little earlier in the week here, I guess I guess it was last Friday. Last Friday was the first close above the trigger. This sucker is volatile, right? Because it's a triple leveraged ETF, and like I said, it's the gold miners. But what I thought was interesting about this is how it also was a previous trade back here in January into February, and look how it pulled back last time. It hit the target, went past it, parabolic stop and all that, pulled back just enough to kind of tag this trailing stop here, and now it's like had another complete sort of cycle, right? It's pulled back significantly. I mean, look at this, it's almost $24 down to 17, and now it's sort of turned back around. And so this just kind of goes to show that the same stock can be traded over and over. I've seen a couple of them cycle through the system a couple of times. So this one's got a pretty decent look to it. What's interesting is that gold itself has look at the monthly chart of gold here, Jeffrey. What do you think of this? This really sort of looks like it's shaping up. I mean, it's still not there, obviously. Gold or GLD. Actually, the price of gold is over 1,300 now, but this GLD is its own sort of animal. It's a little ETF, but this is a monthly chart, and I have some lines drawn on here, and boy, it really looks like if it can get a breakout here, it can get something going.
Yeah, gold is one of those things that either gets trapped forever and ever, it seems like, or when it does finally bust out, we've had those big, massive, macro runs in gold. What was the highest price ever in gold? Was it 2000?
Yeah, like 1850 or something.
Somewhere, yeah, it got real close, but those big macro runs came after, many years of like sluggish behavior. So gold, yeah, gold is looking like it's setting up with this big macro flat top breakout, and all that uh, uh, higher trading action that you see over on the left there. What's interesting about that now? That would be considered overhead supply, right? However, as time goes by, that overhead supply starts to dissipate because people eventually capitulate, right? How many years back is it? That's a couple.
Oh yeah, this is going back to the inception of GLD, which is like 2005, right? And so yeah, just what you were saying there. This
Those
is 2013 here, right?
right.
This is a monthly chart.
So those big highs that you see there, the more time goes by, the more those the the folks underwater up there that want to be sellers, they capitulate and they're not there anymore. So eventually what happens is by the time we break out, that whole area above there is free and clear. It's a void. There is no more overhead supply. So because we're going back so far in time. Uh, so yeah, that is a good from a macro standpoint. Now we could jangle around in this range for 10 more months, right?
Sure.
But that's something to keep aware of. Yeah.
Yeah, yeah. So anyway, back to Nugget here. So far so good. This since it's a triple leveraged ETF on the gold mining shares, it tends to really move fast, and it kind of picks a direction and goes in that direction really fast and sort of persistent, I guess is a good description of it. So, hey, let's look at Facebook, because Facebook's another really interesting. I don't know why I was surprised to see it on the pending list, back when it was, but it literally, and I think we might have talked about Facebook last week on the show here, but triggered back here on, let's see, Monday, February 25th at 164.35. Nice little trend line break ahead of that. And I'm going to guess that this was earnings. And so, so far so good. You can see a couple trailing stops got ratcheted up, and a parabolic stop kicked in just the other day before yesterday, and you can see it's kind of poking around at this parabolic stop, and lo and behold, here's the target sort of directly overhead. So, what's funny about it is Facebook's been getting a lot of bad press lately. Every time you turn around, they're getting bad press, but it's not really seeming to matter to the stock price, which is kind of interesting. And so that's kind of where fundamentals only go so far, right?
Well, fundamentals, or even with the bad news, the true fundamentalists are just ignoring that as like noise. Uh, but right, when the when a stock sets up with a big technical pattern, then that can be the big driving force no matter what comes out. It's kind of like damn the torpedoes, full speed ahead. They don't care about the news. But what's interesting about this also is, again, this just shows the mechanical nature of this system, that you can see that the current system trailing stop, right, which you got at what 165.60,
60.
is above the trigger line, right? So this is an example where just following this mechanically, you're probably right at or around break even on this trade, right?
Hmm.
So it's there's no, you can't lose, unless there would be a gap down below you. But um, this is a good example of how just following the system mechanically. This is one that gets you to break even, and there's you know very little chance of loss at that point.
Yeah, here's another one, NTES, that we talked about. I believe this triggered right around the time we did the show last week, and this has got an interesting sort of pattern too. This was one that I sort of favored. I remember talking about it at the time. And the reason is that this particular stock, it tends to have like these big sort of thrusts down and then move in the opposite direction, and then a big thrust up and then a pullback. And so it just sort of completed before the entry, it had just sort of completed like sort of a double thrust down, right, to these lower levels, started turning around, and it looks pretty good. It actually looks like it's starting to move in the right direction, and it's about, I'm going to say it's about a third of the way to this target here. So this has got a pretty good look to it. I noticed that the initial stop is still in place on this, and I'm going to guess that's because of the volatility and the ranges on these bars.
Well, yeah, I mean, the initial trailing stop has three types of logic that determine like when it should start to move, and the trick part of the trailing stop is that it's got to be close enough, right, to protect your position and against big losses, but also there's got to be enough wiggle room to let the position actually germinate and get off the launching pad, right? So you can see that one had a little bit of volatility, and so I wouldn't be surprised if like today or tomorrow you start seeing that trailing stop make a move.
Yeah, that would sort of make sense. A couple other ones here I wanted to look at. Let's see. I jotted a few of them down here, the ones that I thought had a good look to it. This EXEL, which is, I was going to talk about this morning, and talk about how it looked like it was sort of getting ready to break out. And here, as we speak, we're getting sort of, I don't know if you call this a flat top breakout, but I had drawn a trend line here, and then I erased it so I could draw it again live on the show. But this one's got a pretty good look to it. We've already had a few ratchets up of the stop here, and look at how this thing is actually breaking out today as we speak. And so that was sort of one of the things, we caught like the trigger, I should say, was sort of at the bottom of like this little double dip thing here, and then caught it actually before it broke this trend line. And then I was looking at it, a few times here recently, thinking, man, this thing's really going to have to go on and break above these previous highs. But there you go. It's got a pretty good look to it.
Yeah, well, what's nice about that is that um, the the stock, once it closed above the trigger line, you had all of that consolidation, like, right, the stock wasn't really doing anything for over a week, and then we broke to the upside out of that. So that's really showing strength. And then like you're showing there, we're breaking above that overhead resistance line. So this is a stock that, if it can go a little bit higher and then build a little bit more support, this thing can keep chugging higher.
Yeah, I'm just adding the target to it up here let's see, the target's calculated at 24.95. So I got that pretty close right there. So yeah, within distance here, right? I noticed some of these stocks, when they start taking off, like this is a good example, it tends to really get something going, right? You get like a long range day, a little consolidation, a long range day, and then boom, it just takes right off. And so kind of looks like it's breaking out of this little consolidation, and today we're sort of getting one of those long range days. It's done it back here in the past, and so that target looks like it's within sight here.
Oh yeah, the target looks very doable because now that all you need is like a gap update tomorrow, and you could see the price run up towards that target area. But Again, yeah, if we see a gap up tomorrow on this stock, you're likely to see that parabolic stock probably kick in a little bit, and then you'd be bracketed in between the target and a parabolic trailing stop. See?
Speaking of which, there actually is a parabolic stop. I just hadn't drawn it on this one yet, so I'm going to go ahead and draw it here real quick. The parabolic stop is at 23.45, which is going to be, it looks like it's sort of just below yesterday's low. So, exactly what you were talking about here. You got a parabolic stop. And so you want to talk for a second about how you're bracketed in between a parabolic stop and the target. And so if you were in this particular stock, you could actually put an order in for half the position to sell at either the target or the parabolic stop, right?
Correct, right? Yeah, you bracket that in, and that's a great way to take your initial profits, is try to pull half off at the target or protect half at the parabolic stop. Yeah, it's a easy to follow strategy, and you're gonna get this situation, quite a bit. I'd say maybe 50% of the time you'll probably see this situation.
Interesting, interesting. Yeah, that one's got a pretty good look to it. What's really interesting about it is that if you zoom back on these chart, if on this particular chart here, you got like this huge bottoming pattern, and it's finally starting to break over. Like if this was a giant inverse head and shoulders, it's finally starting to break over like the neckline, right? And so the context of the longer term chart is that it could get to that target and keep going, right? Like this is a stock that could actually, well, we don't know this, but theoretically it could be headed much higher past the target, right? And so that's why it's not a bad idea to lock some in and maybe let some ride.
Yeah, sure. I mean, again, you have to decide as a swing trader what kind of methodology you want to follow. And in the documentation, there's examples of like multiple ways you can, multiple methodologies you can follow. And the other thing is you don't have to lock into one forever. You could follow one for a while and adapt and introduce another. Uh, in less than robust market conditions, if the prices are hitting the targets, you may just want to pull all your profits off at the targets and be done with it and move on. If we've got a market that is on fire and just keeps going like we've had for months, this is where you can take profits on half and park the rest at break even and see how much more gain you can get out of these stocks, because uh, a lot of these stocks will go 3 times past the target. The initial target is computed as a high frequency uh, hit target that is a dependable place to take some profits, basically, but doesn't mean that that's where we're stopping.
Yeah, sure. So if you're a real short-term trader, you could look to get in, maybe be in this thing for, a few days, a couple of weeks or whatever, hits the target, you pull it off, you move on to the next one. So I wanted to look at one that just got opened, literally like today, right? Is this ARRY, which is another one with a really beautiful pattern here. This ARRY. So this triggered yesterday. It closed above the trigger, which was 23.35. And let's see, what was the close yesterday? Was 23.39. So it closed, just barely a nickel above the trigger price. And then this morning opened above the trigger, so this is a go, and you can see how this is kind of clearing those highs right now. So kind of an interesting chart because it's had a big uptrend, right, and then it had a little consolidation here and looked like it was about to break out, but it took a pretty nice little dip here. So a lot of what you see here is sort of a function of the overall market, because last week the overall market had a very similar sort of dip, right? And then you see that real nice pivot low right here, and the stop kind of right down around the pivot low. And so this thing looks like it's trying to clear these highs and get something going to the upside.
Yeah, and this is a good example to talk about the different flavors of entries, basically, you're gonna, like, you just drew a circle around that doji bar back a few days, right? And so you could be scratching your head going, well, how come we didn't get in way down there? Wouldn't that have been a better price to get in? And it just has to do with the mechanical nature of the setup and the entry. In any kind of trading, again, whether it's day trading and basically any kind of pattern we could trade, we're going to get a clean pattern and we're going to get a sloppy pattern. And guess what? Some of the cleanest patterns you get can fail, and some of the sloppy patterns you get will go on to work, right? So the point being again is, don't fret about the little minutia, because over the series the system delivers, it pans out. So right, you could have said, well, I could have bought this 3 days ago at a much lower price and I'd be on my merry way right now. And that's true. I mean, if you could have just but think about it this way, you could have bought 3 days ago on that doji bar, and then price could have continued lower down to $18.
Well, you didn't know that this was really a pivot low until it got confirmed, right? And so,
Well, exactly. And so the point being is that there there's always a little bit of sloppiness and fudge factor that's going to be in trading. Again, some of the setups are smooth as butter. You get in and things just take off, and some of the entries are a little bit sloppy, and that's just the nature of the game. We don't know until in retrospect. So don't fret about that stuff. Just again, treat this as a mechanical system that you don't have to fret about the minutia too much. You just take the entries. The most important thing is the proper position sizing and starting off with very small positions and building size as you go. You do those two things and just follow everything mechanically, and it wins over the series.
yeah, the other thing that I was going to mention is that what I've noticed on a lot of these is that the stock starts moving in the right direction, and then we sort of jump on board for that rather than trying to anticipate whether it's going to start moving. What I've noticed is that these trends like kind of start right, like you sort of had something like that over here. You had a sideways move, and then it started trending up. Once it starts trending up, you get what I call inertia, and the inertia tends to keep it moving in the same direction, right? So yeah, I think this is a really nice kind of a looking entry point on this. And so the stock's trying to break out of this consolidation here. It's poking above it, and so far so good. So
Well, the main thing about this particular entry is that even though that the trigger line's a little bit higher there, uh, the stock did put in that really good pivot low, and that's where our stop is below that, right? So, in other words, now we've got that pivot low in place, and again, I mentioned that there was that doji pattern. Price would have to come all the way back down and fight all of that support now on that pivot low to get down to hit our stop. So, the point is that it's a low risk, even though the trigger line's a little bit higher, it's a low risk entry because of that.
interesting. Let's see, I have one more. MITK. And this is one. Okay, this was one that I had jotted down because it was kind of proving the same point. The consolidation, the real nice pattern here. So this one would have triggered a couple of days back here, but this is another one that nice primary uptrend, and then you had a consolidation here, literally from the middle of January to practically the middle of March. But man, this has got a really nice looking. If I draw a trend line down across like these highs here, you can see that it's breaking out of like kind of a little wedge pattern right here, right?
Yeah, this is another one that's like getting really close to its target. If you put its target, I think its target is 1195. So
All right, I'll draw that on here.
so we're reaching for that target.
Interesting. Yeah, you can see today it kind of poked up there and is just it's sort of getting turned back a little bit. But I notice I'm looking at an intraday chart on my trading platform. It had like a one of those big sort of spike ups right at the open there, like in the very first, I guess right as the market opened, it had a huge spike up. So it looks kind of weird here, but it's kind of it's headed in the right direction. It broke out of this nice pattern. It's in a beautiful uptrend. So what did you say it was? 1195.
Yeah, 1195.
All right, I'll mark that on here. So yeah, I usually go back and I mean, there's a when you're drawing these things on here, it takes a little bit of time to get everything sort of lined up and marked just right. But yeah, I really sort of like the look of this one too. So been some interesting picks. One of the things I like to do is sort of go back and look. This thing zooms out to a 2 year chart, and so sometimes I like to just get a bigger, longer term context. But a lot of times that doesn't really matter. But it's just fun to look at sometimes, see what the bigger picture looks like. And so this looks like it's breaking out to multi-year highs.
Yeah, and you can plainly see like that's kind of a macro flag pattern that we're breaking out of pennant pattern, bullish pennant pattern.
Yeah, let's take a look at the overall market real quick here, and it's kind of interesting. The thing about last week was I had drawn this little sort of inner trend line here, right? And it got broken. We took a pretty good little winger. And then Monday was, let me take that off there. Monday was a crazy day, right? For almost no reason at all. I couldn't really find a reason, but Monday the market basically sort of gapped up a little bit and had like a surge at the open, and then literally all day long. I mean, all day, Jeffrey, and I know you saw this. The market had one of those trend up days, and it was just the persistence on the 5 minute chart intraday on Monday was just incredible. It was just a super trend up day. And so what I was sort of thinking, and maybe you can tell to talk about along the same lines, is that maybe with this pullback here, some people got caught off sides. They thought, okay, here it is. We're going to take a winger here, and they got short. And then Monday just kind of felt like a short squeeze to me.
Oh, sure. Well, a real good visual is go ahead and put a horizontal line under the low of what was that, the eighth, that pivot low. Get a horizontal line that runs across the whole chart, and you'll see how that day lines up with a bunch of previous support. So, the market did a pullback, but it basically spring loaded right above a bunch of previous support levels. So it made sense to me that, yeah, especially when we gapped down on the eighth and turned around, that was short covering that was driving the market to bounce. So you can see how back a little bit that's the exact area we've gotten support like multiple times. So
Sure, sure. That was pretty amazing though that it was such a big persistent. I think the S&P was up like not quite 1.5%, but it was very significant. And so just kind of
oh yeah, we're talking major short covering. Uh, uh, the turnaround day, the eighth, you had a mixture of two things. You had shorts probably hitting targets, right? Because they could see that support. So obviously, if you're going to cover, that's where you do it. Plus, the longs were looking and saying, "Hey, it's about time we bounce because we're right at support." So you get a double whammy. You get the short covering on targets, and you get new longs entering, and that just catapults the market. And then, like you said, on that big up day, that's where there's going to be continued momentum buying, but also just think of all the short stops that are getting hit, and they're just fuel. It's like pouring lighter fluid on a campfire, right? And so those are beautiful days, if you're intraday trading and trading long, because they just keep going higher and higher, like up an escalator.
yeah, what's amazing here is that it almost looks like we're getting sort of a continued short squeeze. Now, this is options expiration week, right? And it's also quarterly if I'm not mistaken, it's quarterly options expiration. And so over the years, there's always, it's kind of weird, but there's always been sort of a tendency for the market to rally into options expiration. And so I believe it's this Friday, in a couple of days here, the S&P gets rebalanced, the indexes get rebalanced, all the quarterly options expire and all that. So we're probably looking at a couple of interesting days going here. And so, what I'm thinking is that this little sort of dip here kind of made people think, okay, this thing's going to roll back over, and they were probably, there's still a lot of people out there that think that we're going to retest these lows back here, right? And so it's going to be interesting to see. I mean, it's clearly like right up here where I have this horizontal line drawn around 28, just under 28.20 is these prior highs. I mean, that's clearly a huge resistance point, and so it's going to be interesting to see the battle that occurs when the market, when and if the market gets up around this area here. And so, I've kind of, and of course, trying to predict what the market's going to do is futile, obviously, but and that's why we stick to a mechanical system, right? And here's another interesting point is, last Friday, right, when we were sitting here, we'd had this pullback. I was looking at all these pending trades, and I remember commenting to you, and I was like, "Oh man, we got all of these pending trades, and the market looks like it's ready to roll over and this and that." And then, obviously, if the market does take a big winger, then they're not going to trigger in. But that's it goes back to the idea of trying to anticipate what the market's going to do as opposed to just following a mechanical strategy. And lo and behold, the market, I think the old saying is the market's job is to frustrate the most participants as possible, right?
Yeah, I've heard a variation. Yeah, what I've learned over the years is that, again, if you're going to follow a mechanical system like this, don't worry about the market too much. Now, obviously, if we go into like, a bloodbath where, let's say, the market, every day you wake up and it's just dropping, another 500 points, and that type of thing, where it's just blood in the streets type of thing. Take a couple days off or that week off and don't buy anything. Let the dust settle a little bit. That's not going to hurt anything. You're not going to remember, you're not taking massive positions on any one symbol, so you're not going to miss any massive windfall, right? uh, so you got to get away from thinking like, I missed it. So just take some time off, come back the next week and see if the market seems stabilized, and then start your buying routines again. uh, but yeah, you can be correct and hit the perfect pivot low and upswing on the market, or not. So I've learned that I don't fret about what the market's doing too much, other than, like I said, if there's blood in the streets, you just take a week off and let the dust settle a little bit. Other than that, just keep the buying going, right?
Yeah, well, the time that you mentioned about the blood in the streets and the market tanking every day was kind of, headed into the holidays was the last time we experienced that. And my guess is, and actually I'm pretty sure that what will happen is you'll have a bunch of pending trades and you get these big down days and they don't close above the trigger because when the market
Well,
fart.
yeah, exactly. You're going to have a lot less stocks even triggering if we go into that. So that would be like a controlling throttle that throttles you back down. But yeah, the main point is it's fun to talk about what the market can do, and these are all, best guesstimates on the technicals of just to. It's good to have an idea of the different scenarios that we might see, but trying to actually predict and bet the farm on one is a tough one.
Well, it just goes to show that you get a little dip like this and you start to see some stocks trigger in, and you don't want to assume that the market's just going to roll over and go down. So it's been extremely resilient lately. And so before we wrap the show up here, speaking of position size, I believe that we're getting pretty close to having our position size calculators, and so I don't obviously want to promise anything, but we're getting good progress there, and so um, maybe you can give us some idea of when we can expect to see the position size calculators.
Well, yeah, I mean, we're under development on those, and so let's just see. We were shooting for this week to have like a prototype that we can start testing, and if we get there, we can then probably the following week we can um, introduce them on the show and talk about how to use them and whatnot.
Okay, yeah, that's gonna be a really good sort of that's gonna be kind of like the feature that really sort of nails everything down and solidifies it here. And I read a couple of interesting articles over the weekend about position sizing and you know, you've heard of the turtle traders, right? I think there's a book called The Turtle Traders, or there was like this big study, and it was literally you know, all sort of designed around position sizing. But there was something really interesting that I saw in this article, and it kind of goes back to this original pie chart that we were looking at. This pie chart, right? And check this out. I don't know if you've ever, I know you've heard of the turtle traders and their kind of methodology and all that, where you never lose more than 1% of your portfolio, 1 or 2% on any trade. But here was the interesting thing, Jeffrey, is they had like, it was something having to do with like natural gas, like a natural gas futures contract. And they had 28 losing trades in a row with a really super tight stop, and then they had like a winner that was like 34 times the risk reward or something like that. I mean, it was something really crazy. And so I mean, it was basically, the concept was, it was kind of the opposite of this. They had like, you know, a huge percentage of losing trades with minimal risk, and then the winners were, you know, the winning trades were very small, but they were huge, right? And so it would be like, you know, it'd be like losing, you know, $50 on a whole bunch of trades and then making, you know, $1,500 on the one that actually worked.
Yeah, if you have the mental, stamina and fortitude to be able to have that many losers, hoping that your system's eventually going to pick a big winner, then and that's what the whole crux of any kind of strategy is all about. What is the ratio of your win loss ratio and your gain size versus your loss size. That's why it's difficult if you ever hear somebody tout their 97% accuracy rate. Well, 90%, 97%. Well, what was the target, right? Two pennies away. Um, you know what I'm saying? So the point is that just the percentage win rate doesn't tell you anything. You have to have the percent win rate and your your average gain versus average loss as a factor.
Yeah, absolutely. We've talked about that before, and I've actually seen, you know, I've seen some people out there that have like, you know, they tout high win rates and that, and you look at like some of their examples, and I mean, you know, typically, you know, they fall into one of two categories. You know, some of them are going for like 35 cents, right? And so, you know, you're taking a trade to gain 35 cents or whatever. And so, in order to make that feasible, you have to take a huge sort of position size. And so, and the other category they fall into is, you know, they load up on a bunch of stocks and they don't sell them when they're down. Like you know, they just hang on, and eventually over time, you know, if you hang on to a stock long enough, you know, typically it's going to poke into the positive at some point. And so, but typically, I mean, you know, like a lot of these trades that we're going for, I mean, look at the percent moves on these things, right? Let me go back to this chart right here. It looks to me, and you can see by, you know, the average percent gain being over 10%, and so we're kind of in a sweet spot here. We're swing trading. This is a low stress, kind of a low frequency thing, and so, you know, these gains are fairly extraordinary when you look at sort of the bigger picture here, and so this is a whole different type of thing. I mean, we're not, you know, we're not sweating the nickels and dimes here, right?
Yeah, one of my little catchphrases that I like to say over the years is that trading is all about timing and tolerances, right? You got to get in at just the right time, and your tolerances have to be calibrated just right. And if you can do that, you can stay in the trade and you can get the best follow through. So our little swing trading system here is got the best calibrations that I've ever been able to come up with in all my testing and all my development. And again, it's the amount of the bang for the buck that we get off of these trades with the stops that we use. So with the kind of timing that we have on the entries with the trigger line and where we place that initial stop, and then the follow through we've got a really good calibration on that timing and tolerances, and we get really good ratios with the follow through, and that's what makes it a winning system.
Yep, yep. Okay, I wanted to wrap the show up here and just let everybody know if they would like to check out the rest of that article and all the details that you can pop over to investingsystems.com, hit the blog page here, and got some pretty interesting blog posts here. Been kind of keeping up with putting some different stuff in here. We talked about the price volume crescendo a few weeks back and made that a blog post. And so, anyway, I encourage everybody to pop over to the blog here. And, here's our little 3 strategies you can use here. And so, this is where you will find the recap of February. So I want to thank you for coming on the show today, Jeffrey. It was pretty interesting. We looked at some charts, and I will see you here next week.
See you next week, Bill.
All right.